What's going on, traders? It's Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is May 4th, 2021. Please do me a huge favor, click the like button on this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today, we're going to talk about the price action in the indices. So we had a pretty big, corrective day in the markets. We were down at one point about like 1.5% in a bunch of these indices. So we'll talk about that. We'll go under the hood and check out our sectors and style factors. We did a rebalance of the Pristine Capital long-term trend portfolio, so we're going to go through that as well very quickly. And then we'll wrap up with some options order flow. Before we jump in, quick risk disclaimer. Nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades. All right, so let's jump in here and dive in. So if we take a look at our price action, today we had S&P 500 as measured by the SPY closed down 0.62%. We had the NASDAQ QQQ finished down 1.8%. We had the IWM small caps closed down 1.19%. And we had the Dow Jones close positive 0.11%. So there's a lot to cover here. So looking at our S&P 500, opening up for the day, it was looking kind of precarious in the pre-market. Around 7:35, there's a pretty big wave of selling, and it automatically pushed us lower, where it was like, okay, what kind of day are we going to get here? We talked about this yesterday, where pretty much the first of month flows were completely sold into. Luckily, I did a bunch of cleaning up in my trading account. But yeah, today, surprise, surprise, the selling continued. Throughout the day here, you can see this got, pretty steep sell-off. So if we look at our hourly chart, we sliced through this weekly value area, and you can see we were really slipping into the abyss at one point today. Towards the second half of the day, so you can see around lunchtime, we started to rally. And, if you were not watching the price action at all today, and you just came back at the end of the day, you'd be like, oh, okay, little pullback in the market. If you were really, glued to your screen, at any given point during the day, you might have been like, oh my gosh, I need to stop out of everything. So yeah, pretty crazy day of price action. One thing, it's not a good thing that we crossed below this monthly point of control here. That definitely shows that most of the buyers that transacted in April are now underwater. That's what it shows quantitatively. I do think it's a good thing, though, that we had every reason to just continue to slip into the abyss. Because if you think about it, at this point, when you're trading down here at this 41.21 level, almost everyone that transacted is off sides. People are starting to think about, oh my gosh, do I need to start stopping out of positions, all that stuff. And we were able to auction back up. So granted, it's not like today was like a bullish day of price action, but I think it's great that we were able to rally off the lows and close above that 20-day simple moving average. Same thing if we pull up our NQ. This is our NASDAQ. NASDAQ at one point was down over 2.5%. And NASDAQ definitely doesn't look strong here by any means. We're trading below this monthly value area. But again, even this one, rallied a bit off of the lows. And if we look at the Russell RTY, you can see here, Russell, same deal, slipped below this monthly point of control, but actually auctioned up. And you can see the small caps actually lost all of these key moving averages. So in the grand scheme, these small caps, they've been doing a whole lot of nothing for the last 2 months. And then our big winner for the day was the Dow Jones. You can see, oh my gosh, yeah, we slipped almost completely through this. So like for me, I typically view these as more like bullish days because, you can see we auctioned all the way below this point of control. We looked below to see what was there, and there were no more sellers once we got below that point of control, and we auctioned higher. So this, to me, it's a really nice flush out. It's a nice flush out of sentiment, nice flush out of the weak hands. we also had a lot of negative headlines hitting the tape around, the big one for today was Janet Yellen saying that, interest rates might have to rise if we get higher inflation. And that was like, oh gosh, here we go again. Now the market's selling off. What I noticed towards the end of the day was then there were some bad headlines that came out from Kaplan. Again, he was kind of saying like, oh, we might need to tighten monetary policy. And the market just kind of looked through those headlines and we didn't get like another knee-jerk reaction lower. So once I saw that occur, it was around like 2 o'clock p.m. At that point, I was like, okay, we were probably teetering, below this 20-day simple moving average at that point. It was like, all right, the market's not really reacting poorly to those headlines. So yeah, we ended up having, in my opinion, a pretty good close for a really tough day of price action. And then if we pull up here, so those are our headline indices. One thing that I did during the day, so a couple of things. I talked about this in our pre-market session where you have to keep your composure when you get these, when you get these big sell-off days. A lot of times, the big sell-offs are really when you get the opportunities in the market. And that is something where, there's sometimes you go out there to trade and you're like, all right, let me see if there's any good opportunities out there. And it's very tough and it feels like it's kind of forced. And a lot of times I get that when the market's just chopping around. For me, something that I want to work on in my trading is when the market is chopping around and just kind of like, it's overbought, but we're chopping, or we're getting these distribution days, being less active, because on a day like today, as I started to see this price action unfold, I was like, this is such a beautiful opportunity for so many of these names. And I think if you're a really like low conviction player, maybe you only look at, price or technicals, you might not think that. But when you look at some of these businesses that are just so fantastic and it's like, oh, now I actually get the chance to buy them at a cheaper price than at any point in the last, few weeks at least, this is where I want to buy versus, when they're like super extended and they're just kind of blowing off. So one thing I did, I talked about, hey, if you need to just jump off the desk, do that. I did that around lunchtime. Lunchtime was when the price action was literally like getting the worst. And I was like, I'm going to step off and, just go do something else for a little bit, have some lunch. So I did that. And pretty much by the time I got back onto the desk an hour later, it was like, oh, okay, the market's still pretty much in the same spot. It's a good way of just composing yourself. That way you're not staring at like every tick, like, all right, now we're down 1.1%. Now we're down 1.08%. Like, you're not just looking at it. Another thing I did, I rebalanced the long-term trend portfolio. So I really like this rebalance. There were a bunch of names that I added to, and there's one that I added a 4% weight to that's brand new in the portfolio that I really like. There's a pretty good catalyst behind this name. It's a name that, you're not going to hear anybody talking about like on FinTwit or whatever. It's a more mega cap name. So I'm actually going to do a little bit more digging on that one tonight. And I'll share, my research and what I find with members. So that just got rebalanced. If you're interested in the trend portfolio or anything we're doing at Pristine Capital, feel free to go ahead and sign up. All right, so looking a little bit under the hood, another thing that I liked about today's price action was the breadth of the market continued to improve throughout the day. So you can see overall today looked like it was horrible. It was like, oh my gosh, here we go again. But on a closing basis, when you look at these advancers and decliners in the S&P 500, there's not really even that many more decliners than advancers. The Qs, just horrible breadth here. But yeah, the S&P 500 and really all of these indices closed with better breadth than where they were for most of the day. So to me, that's like, all right, we're picking up some steam here. If we look at our heat map, when you look at this, those FANG names really got blasted today. So Apple down 3.5%, Microsoft down big, Nvidia, Google, Amazon, all of them really got hit. When you look at the market and kind of like remove these FANG names and really just like tech as a whole, the market doesn't look too bad. So that's another thing I was kind of finding solace in, where it's like the sell-off is really bad, but at the same time it's, you know, a specific group of stocks that are really under pressure and kind of just like holding the whole market down. But as the day went on, you know, more and more of this heat map started to turn green. So speaking of these FANG names, the FANG names, you know, this is another scenario where when you look at this, like let's say Apple, for instance, you know, when these names are really ripping, it's like, man, I wish I could just get a dip in these names. They're so awesome. And then it's like, okay, here's your dip. You know, what are you going to do? And then typically at that point, that's where everyone's like, oh, I don't like those names anymore. Those are bearish. And like Apple, I can see, you know, this chart pattern looks kind of messed up. It looks like Apple, you know, it's not on its way to new all-time highs anytime soon. But one that I found that I traded was Google. And yeah, Google had really nice earnings. It's been in a really nice bullish trend. And this is a name where up here I was like, man, I wish I had an allocation to Google. I do have it in the trend portfolio, but not in my trading account. So for a day like today, I pounced on this one because I was like, Google is like arguably the best business in the world. It's literally like a money printer or like a toll booth. So, you know, you definitely could be like purely technical and just be like, well, it's down today, so I should like it more up here than down here. But I mean, today's where you got the pullback to the 20-day moving average. So when you have these assets that are in really bullish trends, and then you get those pullbacks, you know, that's really where the opportunity is. And what I find is you can usually tell by what's going on in your account. Where like what I noticed was the past like 2 weeks or so, it's been very tough to make money. Where like, you know, it'll be like, oh man, market looks bearish here, so I'm not going to buy. Then the next day it kind of zooms higher. You end up buying on the highs. Then the next day is lower, and it's just like very choppy. What I find is when I'm buying into weakness, like today, it was like shooting fish in a barrel. If you were buying almost anything at 11 a.m., noon, by the end of the day, you are positive. So I do think it's important. Like with long-term investing, oh my gosh, if you're not buying a weakness, like you are, you know, just doing it completely wrong. With short-term trading, I think it's a little bit different. Where of course, like as a short-term trader, you don't want to be, you know, buying breakdowns and stuff like that. But I'm more of like an intermediate-term swing trader, so I do want to incorporate more buying into weakness in my strategy, because I find if you put yourself in a situation where you can buy into weakness, a lot of times you get these really good opportunities that, you know, surface. So let's see, we got our heat map. If we look at our sectors here, so you can see, you know, a lot of red here. You know, this is a bloodbath. So the solar stocks particularly, at one point today, they were down almost 7%, closed really weak. These blockchain names closed very weak as well, down 4.63%. Yeah, the ARK funds, very weak. Semis weak. You know, all of these. One thing I noticed is that there were areas of the market that did turn green throughout the day. So these home builders, I added Lennar yesterday, up 0.29%. Financials, industrials. So yeah, throughout the day, you could see, you know, very clearly, you know, which areas of the market were being bid. And for the most part, it's not really like the high price to sales areas of the market. It's a lot of these more defensive areas and these areas that benefit from, you know, higher yields. Then if we look at our style factors, you can see we had the high div, low vol finish positive, and we had value finish positive. But all the other style factors were negative. And if you look here at this momentum style factor, you know, that was down almost 2%, and then international momentum as well. So let's pull this up. Yeah, so let's pull up some of my trades for the day. So what did I do today? So if you watched the video yesterday I cleaned up a lot of my names that weren't working into the strength of the market. So for today, I was like, okay, right now I'm down money, but I'm not really in a spot where I'm like super off sides and I'm like freaking out. This is a good opportunity, in my opinion, to add a little bit. So I added a May 7th call spread in Google. I got the 2345 by 2355 call spread for May 7th for $4.80. And Google, it dropped even lower than where I entered throughout the day. But by the close, we are pretty much at my upper strike. So if we get any sort of bounce in the market tomorrow, anything like that, this Google call spread is fully in the money. So that one's looking pretty good. We'll see what happens with it. So I entered that one. I got long some Honeywell September 17th 220 strike calls for $13.75. That's another thing. When I'm buying into a market that is weak, what I want to make sure, unless it is a day trade, I want to give myself, several months on my expiration and make sure I give myself, more than enough time. So Honeywell. Yeah, I really like this setup. This is one of my favorite setups where you get a bit of a pullback and then just very tight price action for a couple days. This name, it's in the Dow Jones and it's an industrials name. And you can see here, it advanced on very high volume. So looking strong. We'll see if it can break out of this range and maybe tag the top of this monthly value area. Yeah, looking really nice. So that was Honeywell. And then for some stock trades, so PAYA, this is a name like I said the other day, I stayed up all night on Saturday just doing research on a bunch of companies. So I feel like that's where you get an edge too during these market sell-offs. Like when you've done your homework and you're like, oh my gosh, I know like what the opportunity is here. So like I'm not really afraid to step up and buy weakness. PAYA was one where I'd been thinking about it on Monday and I was like, but today, it really just seemed ripe. So PAYA, they're a payment processing company. They operate in the middle market. They're going public through a SPAC. And this name, it's kind of just fallen off with the rest of the SPACs, which makes sense. But PAYA, what's really cool and why this honestly is my favorite SPAC right now, most of the SPACs that you look at, they don't really make any revenue right now, and they're all trading off of like 2026 revenue. What I like about PAYA is that they're doing a lot in payment processing volume. They already have, I believe it's like $30 billion in volume every year. They just announced a little tuck-in deal where they acquired this other smaller payment processor. They trade at a cheaper valuation compared to the others in the group, and they report earnings Friday. So there's a catalyst ahead to maybe boost this one up a little bit. So I was able to get in around $10.50 this morning. And this one ended up, auctioning up to a doji candle. So looking good so far. I really like this one, PAYA. Just into the earnings. You can see this chart, looks really ugly. But yeah, for something like this, SPAC deal, I'm like, all right, let's do it. So yeah, PAYA. And I really like the payment processing group. I just think that business, it's almost like a utility at this point, except, it's a much higher margin business and just a better business. So I got long PAYA. Roblox, I added to my position. I've been building this over time. Roblox is another name that I'm very bullish on for the long term. So we'll see what happens. They have earnings coming up in, I believe it's like a week or so. So I've been accumulating here. We're still trading within this IPO base. And this to me, again, I was like, okay, this is where I should be adding my exposure to Roblox. As much as like I don't want to or feel like, oh, well, the market's selling off, why would I buy anything? Like, I'm like, this is, if I'm going to buy, I want to buy today. So, yeah, I was able to purchase some shares. I got these for $69.10. So slightly green on this one already as well. And then in the after hours, I did purchase some of this NGA. NGA, they're merging with this company Lion Electric, which their primary product, they do commercial electric vehicles. So it's not like Tesla or like CCIV, like Lucid, where it's like, these are the luxury vehicles everyone's going to be driving. This is for commercial use, school buses. I did some analysis on this one over the weekend as well. And you can see here, a headline hit the tape. U.S. Senate Democrats propose $73 billion to shift U.S. to battery electric zero emission buses. So I saw that and I was like, this just sort of clicks. So I added some exposure in that one as well. That about does it for my trades for today. Let's take a look at the options order flow. And you can see players were just blowing their brains out buying puts today. So yeah, we had Sedge puts, Apple. You can see there were some calls in the morning for some of these tech names, Facebook and the Qs. But yeah, throughout the day, pretty much all put volume here. You can see SPY puts going up, IWM, Qs. Yeah, so a lot of put activity. Yeah, NEE, this is the utilities name. I see there was some call activity here. Let's see, NEE. Yeah, this one, also put in a hammer candle after a pullback. I see this one has about a 2% dividend yield. So yeah, this is another thing I was looking at from the CBOE website. They do like live put to call ratios where you can see the data. And I looked at around 11 a.m. and I was like, wow, there's an overwhelming number of puts being bought versus calls. So I try to think about like, when I see this put to call ratio tonight, what is that going to look like? And I would imagine we'll see a pretty elevated, put to call ratio. And that to me is like, okay, I'm getting the pullback. We held the 20-day moving average in the S&P 500. We're likely going to have a pretty high put to call ratio. So that's why I was like, yep, this is the day where I'm going to add some stuff. So yeah, you can see on Friday, put to call ratio is pretty high. Yesterday it came off a bit, but still, nowhere near a complacent level. So we'll see what happens. I'll post that information tonight when it comes out. But that about does it for this market recap video. Hope you all had an awesome trading day, and I will see you all in our pre-market session tomorrow.